Hello, everyone, and welcome to S Corporation versus LLC, Similarities and Differences. This webcast is brought to you by CPA Practice Advisor Magazine and CorpNet. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'll be your moderator today. Before we get started, I'd like to explain how CPE for this webcast works. The webcast qualifies for 1 credit of continuing professional education. If you plan to earn credit for attending this session, you must stay with us for at least 50 minutes. In addition, we'll display 4 polling questions. You will need to record an answer for at least 3 of these questions, as this will be our verification that you are still watching the event. Later today, you'll receive an email from CPA Practice Advisor that contains a link to your CPE certificate, assuming you met the requirements for CPE. Please note that we can give continuing education credit for multiple people watching on the same computer. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll provide an opportunity for you to send us their names and email addresses so that they too can receive CPE credit. At any time, you can enter any questions you might have in the Ask a Question box provided on your screen. And our speaker will try to get to as many questions as possible during the presentation, but any questions not answered during this live webinar will be addressed by the speaker afterwards via email. The slides for this session are not currently available for download, but we will be sending you each a link to the slides after the event, so look for that from us after the event. Today, we are joined by Nellie Aklap, CEO of CorpNet, and now we are ready to begin.
Thank you, Gail. Hi, everyone. My name is Nellie Aklap. I'm founder and CEO of CorpNet.com, and today's webinar is going to be on S corporations versus limited liability companies. Our company, CorpNet, is a legal document filing service, and we can help with any aspect of the business filings, compliance, and payroll tax registration process. A little bit about myself. I'm a veteran entrepreneur in the online legal document filing space, and I've been in the industry since 1997. It's a pleasure to be here. I've helped more than 500,000 small business owners and licensed professionals such as accountants, CPAs, lawyers, helping them get their businesses off the ground and also helping their clients get their businesses off the ground. As a trajectory, I've developed a very, very strong following within the CPA and small business community. And I've actually been honored Small Business Influencer Champion of the Year and was also honored as Woman Entrepreneur of the Year by NAWBO. You can see many, many publications of mine on different outlets such as Forbes, Entrepreneur, Accounting Today, Small Business Trends, and many like publications. So without any further ado, I want to get into this webinar today, our agenda and goals for today. So the S Corporation deadline is right around the corner. For those that may not be aware, for existing corporations and newly formed corporations and LLCs that have not yet elected S Corporation deadline, it's coming, and it's on March 15th of 2025. So we're going to go ahead and review and compare the S Corp and the LLC, even though they both provide liability protection for business owners and allow for pass-through tax treatment. It's best for you as the bookkeeper, the CPA, the accountant, to be up to date on the differences of each and on the entity advantages to assist your clients in making the best decision for their business. So in this webinar, we're gonna go ahead and outline the similarities and differences of the S Corp versus the LLC. And then what you're gonna learn is an overview of what each of these business entities are and how they assist in protecting assets, liability protection, also tax treatment, considerations when choosing one entity over the other, steps to form the LLC or elect S corporation status, and then salary and tax requirements for the LLC and the S corporation. So let's talk about what is an S corp and how does it differ from an LLC. So an S corporation is generally a tax designation that's given by the IRS. It's an LLC or a C corporation that has elected pass-through tax treatment with the IRS. A company has to meet strict requirements with the IRS to qualify for S corporation status, either as a corporation or an LLC. A lot of, there's a lot of confusion here that an S corp is an entity. It's not an entity. It's a tax designation that's given to an LLC or a C corporation. And that LLC or C corporation, when they meet the requirements that are provided as strict guidelines as to who can become an S corp, they have to meet that. They have to then fill out form 2553, file it with the IRS. And if the IRS approves that form, then that LLC or C corporation is treated as an S corporation by the IRS. And there are strict requirements as to who can become an S corp. The shareholders have to be U.S. citizens or resident aliens. There can be no more than 100 members or shareholders within that corporation or LLC. And you have to make the election within 75 days from that corporation or LLC coming into existence. And there can only one class of stock for an S corporation election to be granted by the IRS. And then all the shareholders have to execute and sign that 2553 form before they submit it to the IRS. Now, there are tax advantages for a C Corp or an LLC to elect S Corporation status. For an LLC, generally speaking, the S Corporation election lessens the self-employment tax burden on LLC members. So what we're talking about here is that only income paid to the LLC members on payroll are subject to self-employment taxes. Profits paid as distributions are not subject to Social Security and Medicare taxes. So LLC members may find that the S corporation election lowers personal tax burden. How the S corp election is advantageous to a C corporation is that it enables C corporations to avoid double taxation. As we all know, a C corporation, and the big thing with C corporation is that you get double tax. Once at the corporate level, and then once when the corporation pays out dividends as a distribution to its shareholders, the shareholders get taxed again. So as an S corp, what happens is that we are cutting that corporate income tax at the corporate level. So as an S corporation, corporations' profits and losses flow through to shareholders' personal tax returns and are taxed at the individual tax rates. The corporate entity does not pay income taxes. Shareholders that are employees of the C corporation only pay self-employment taxes on the wages or salary that the corporation pays them. Dividend income paid to the shareholders is not subject to self-employment tax. Those monies are taxed as either ordinary income or qualified dividends. Now, what are some of the S corporation tax disadvantages? Well, number one, it may limit growth potential for both either a corporation or an LLC. S corps cannot have more than 100 shareholders, so growth potential may be limiting. There's also a reasonable compensation key when it comes to paying shareholders on salary or paying members on salary as a C corporation that's taxed as an S corp or as an LLC that's elected as corporation status. Also, an LLC taxed as an S corporation must pay its owners its fair. An LLC taxed as an S corp must pay its owners fair compensation for the work they perform to avoid red flags with the IRS. Also, S corporations are not treated equally at the state level, which we're going to get to a little bit further down the webinar. Let's talk about what an LLC is. So the way I like to characterize an LLC is that you get to have your cake and eat it too. With an LLC, first of all, it's an abbreviation for, and it stands for Limited Liability Company. It's a business structure formed under specific state statutes. It's a formal business structure, which is the simplest to form and maintain. However, it's also a hybrid of a sole proprietorship partnership and a corporation. It is a separate legal entity from its owners, known as its members. And the main benefit is, as the name suggests, limited liability for the members who are the owners of the LLC. However, by default, a single member LLC is treated as a sole proprietorship and it's taxed as a proprietorship, whereas a multi-member LLC is treated as a partnership and taxed as a partnership. So with LLCs, members also have the option to be taxed as an S Corp or a C Corporation. The other advantage of an LLC is that the profits are taxed as personal income. This is why, by default, the LLC, if it's a single member LLC, it's taxed as a sole proprietorship. And if it's multi-member, it's taxed as a partnership. And this is usually lower than what the corporation pays. Now, what are some of the benefits of forming an LLC? First and foremost, it's simple. Okay, the business registration paperwork to form an LLC is minimal, as are the ongoing filing requirements. With an LLC, there's not a lot of paperwork, as opposed to a corporation where there's heftier paperwork and compliance. That with the LLC, you also get personal liability protection. Because an LLC is considered a separate legal entity from its members, its financial and legal responsibilities are also its own and separate and apart from its owners. There's also the benefit of obtaining financing and credit. Financing can be easier to obtain because the LLC is a separate formal legal entity with known assets and obligations and its own federal tax ID number. There's also tax treatment options that are beneficial. By default, the LLC is considered a disregarded entity for tax purposes. As such, income tax is applied in the same way as it is to sole proprietors and partnerships. Last but not least, there is management flexibility. An LLC may either be member managed or manager managed. And that's one other type of option and benefit that is afforded to the LLC, whereas with the corporation, you don't have that benefit. Let's talk about the tax advantages of an LLC. As a disregarded entity for tax purposes, an LLC's profits and losses flow through to its members as personal tax returns. So income taxes are paid at the individual owner level rather than at the entity level. Also, the LLC offers a lot more flexibility in terms of how owners can be taxed. LLC members may choose how their business will divide the company's profits and losses amongst its owners. LLC members may also elect to have their LLC treated as a C corporation or S corporation if they want to further lessen that self-employment tax burden. And by choosing that LLC to be treated as an S Corp if they qualify, and if they otherwise don't qualify for an S Corp election on that LLC, they can opt for the C Corp. And at that point, the LLC members can take a paycheck out of the LLC, and only their portion of the payroll would be subject to self-employment taxes. Let's talk about the tax disadvantages of an LLC. All the LLC's business profits are subject to Social Security and Medicare taxes. This may create an unfavorable financial situation for LLC owners. Why? Because you have a higher self-employment tax burden. So they must pay self-employment taxes on their distributive share of the LLC's profits, which they take in the form of a draw, even if they invest that money back into the business. So a way to get around this is, let's kind of step back for a moment. LLC members cannot be employees of an LLC. Okay, so the only way they can take money out of an LLC is by taking a draw. And by taking a draw, that is why they're going to be having to pay self-employment taxes on all of the monies they take as a draw. So a way to get around this is that having that LLC elect C Corp or S Corporation treatment from the IRS so that it lessens their self-employment tax burden. How does one go about this? By getting taxed, by having that LLC taxed as an S Corp or a C Corp, then the members of that LLC can go on payroll and they can take a reasonable compensation out of that LLC in the form of a paycheck, and only the monies they take out of the LLC on payroll are now subject to that self-employment tax. We are now in time for our first polling question. Gail, back to you.
Okay, this is our first of 4 polling questions. Remember, you'll need to answer at least 3 questions in order to qualify for CPE credit. Our first question is, S corporations cannot have more than how many shareholders? And the answer options are 40, 60, 80, or 100. Make your best guess if you don't know for sure, if you weren't paying attention. And go ahead and choose your answer and then click submit. And once you do that, we'll be getting back to our slides. And Nellie, you can go ahead and continue.
Thank you, Gail. All right, so let's talk about how LLC owners would get paid. Here's some payment considerations. So sole proprietors are not employees of a company, as we know, and therefore do not receive a W-2. Partnerships report business income on Schedule 1065 of the partnership tax return, and the members pay self-employment taxes on their share of the business income. In a single member LLC or a multi-member LLC that elect to file taxes as a C corporation, all members are considered employees of the company and must receive a W-2 from that LLC. LLCs that elect S corporation status file what is called a Schedule 1120S tax return, with members receiving a Schedule K-1 from indicating their share of the profits and losses within that corporation. Let's talk about paying Social Security. In general, all workers, including business owners, pay Social Security and Medicare taxes called FICA, unless income is below $400 for the year. The Social Security tax rate on taxable wages is 6.2%, each for the employer and employee, or 12.4% for both. The Medicare tax rate is 1.45%, each for the employee and employer. In addition, employers are responsible for paying state unemployment taxes for each employee, and the rate varies by state for this. Sole proprietorships, general partners, and LLC members treated as partnerships do not pay state unemployment taxes. There's also people who are 1099s, and we want to discuss how payment is to people who are on a 1099. So another option for paying yourself is having the LLC hire you as an independent contractor. You are still responsible for paying self-employment taxes, and you must follow the rules for independent contractors. For those of you who may not know what an independent contractor is it's basically a person that is hired by a company, but the company is not carrying any portion of paying that company's taxes for the person they hire. So that person is not on payroll. That person is strictly hired for performing a service, and the way they perform that service it cannot be controlled by the person who's hiring them. So if an LLC is hiring someone as an independent contractor, or be it a corporation hiring an independent contractor, that corporation or LLC cannot control the way the service is performed. And there's strict rules that the IRS has set forth as to who can be an independent contractor. So for those of you who are considering paying yourself as an independent contractor or advising your clients to pay themselves as an independent contractor, just beware that you're aware of all the rules around 1099s, because you're still responsible for paying self-employment taxes, and you must follow the rules for independent contractors. Now, the kind of tax benefits that are still available to your company and as an LLC are not as clear. So it's essential to talk to your accountant before using the independent contractor option. Now, let's talk about how S corporation owners get paid. So as an S corporation shareholder who does substantial work for the company is considered an employee and must take a reasonable salary via payroll. The business must put the shareholder on payroll and compensate the shareholder through a reasonable salary from which taxes are withheld. And S corporation's profits are taxable at the shareholder level. Distributions of these profits can be made to shareholders tax-free. S corporation owners can run into trouble if they pay themselves a suspiciously small salary and then take most of their compensation in the form of a distribution to minimize the amount of taxes they must pay. And this is where the IRS is cracking down, and there's a lot of red flag around this. So if you're planning to have a corporation that's being elected as an S corp, and you want to pay yourself as a shareholder through payroll, you must make sure that you're taking a reasonable salary on payroll. You cannot take a small salary and take a balance of it as a distribution, because that causes a red flag for the IRS. And the IRS can revoke your S corporation status if they determine shareholders are substantially underpaid for the services they provide. So it's critical to maintain and track shareholder basis in an S corporation. Tax-free distributions can only be made to shareholders as long as there is sufficient basis. Shareholders' basis has become an examination area by the IRS, and the IRS is cracking down on this. Now, let's talk about pass-through entity tax considerations. So what are we talking about here? Income tax. Taxes of a pass-through entity flow through the owner's individual tax returns. Business profits are taxed at the individual owner's personal tax rate rather than the corporate tax rate. This will be advantages overall if the owner's individual tax rate are lower than the standard corporate tax rate. But many factors can come into play, such as state laws, state tax laws, where a business is located, in determining what is best. So let's break this down by looking at federal taxes for the different entity types that we're talking about here. So let's talk about income tax for LLCs. Single member LLCs. If you recall, as I told you a little bit earlier in this webinar, members of an LLC by default are taxed as a sole proprietorship if it's a single member LLC. So for single member LLCs, income tax is handled the same way as a sole proprietorship. Business income and losses flow through to the owner's personal income tax return. Now, it's different with multi-member LLCs. If you recall, I said 2 or more people in an LLC by default are taxed as a partnership. We also refer to this as multi-member LLCs. So income tax is handled the same as partnerships. The LLC members receive a Schedule K-1 from the LLC based on their share of the business's profits. Then they must report that information in Schedule E of their Form 1040. Now, let's talk about income tax for S corporations. And S corporations' income taxes pass through to its owners, but tax filing requirements depend on the underlying business entity. So the S corporation is not a type of business entity, as we talked about. It's a tax designation. It's a special tax election that eligible LLCs and C corporations may request from the IRS. And the IRS has strict guidelines as to which LLC and C corporation can qualify and meet the S corporation election eligibility. And there are strict requirements, as we talked about. all of the members or shareholders have to be U.S. citizens or resident aliens. There can only be up to 100 members or shareholders. They all must make the election within 75 days of that corporation or LLC coming into existence, or no later than March 15th of the following year. They all have to fill out Form 2553, which is the form that basically requests, is the request form by the IRS that you apply to get S corporation status. And all of the shareholders and members must sign that form, and there can only be one class of stock in electing S corporation for C corporations. Now let's talk about self-employment taxes. The owners of a pass-through entity are subject to self-employment taxes under the Self-Employment and Contributions Act of 1954. Self-employment taxes include Social Security and Medicare taxes. Self-employed individuals must pay the entire 12.4% of Social Security tax and 2.9% of Medicare tax, which totals 15.3% to the federal government. Typically, they must pay these in quarterly installments with their estimated income taxes. Now, what are some of the self-employment tax considerations for S corporations? In S corp, the self-employment tax burden on the business owners is lessened because individuals only pay the SECA tax on their wages and salaries from the business. The individual's employee income from their wages is subject to 50% of the Social Security and Medicare taxes and withheld from their paychecks. The S corp pays the other 50% of those taxes. The remaining business profits paid as distributions to the S corporation's owners are subject to income tax, but not self-employment taxes. Be aware that entrepreneurs must take care to pay themselves a reasonable salary. If they try to game the system, the IRS may become suspicious and initiate an audit. Now, let's go ahead and do a little summary of the S corporation versus the LLC. So, owner eligibility. The eligibility requirements to become an S corp shareholder are more restrictive than those for an LLC. To elect S corporation tax treatment, an LLC must be a domestic company with owners who are individuals, certain trusts or estates. Partnerships, corporations, and non-resident aliens may not be S corp shareholders. Other restrictions on S corps are a limit of only up to 100 shareholders and the stipulation that they issue only one class of stock. In addition to all this, as I've mentioned to you, in order for that S corporation election request to be valid with the IRS, Form 2553 has to be submitted to the IRS 75 days after the corporation or LLC has come into existence. So it's within 75 days of that corporation or LLC coming into existence, or by March 15th of the following tax year. Now let's talk about liability protection. Both the LLC and the S corp protect business owners' personal assets. However, a court might rule that an LLC's members or S corp shareholders are personally responsible for debts and legal issues of the business if they acted fraudulently, personally guaranteed business loans, or were negligent or reckless in some way that caused harm. Let's talk about business income. So as we talked about earlier, to get paid by the business, LLC members take money out of their share of its profit. And by default, they can only take it as a draw. Why? Because by default, LLC members cannot be employees of the LLC. So the only way they can take money out of the LLC is in the form of a draw. And by taking out a draw, all of that money is subject to self-employment taxes. However, an S corporation's owners, called shareholders, who do substantial work for the S corp, are considered employees and must be on company payroll and can take a paycheck as a reasonable salary out of the LLC. Let's talk about pass-through taxation. By default, an LLC is considered by the IRS to be the tax-paying entity as its owners. So LLC members are responsible for income tax and self-employment taxes, which are the Social Security and Medicare on their company profits. With S Corp tax treatment, LLC members still have pass-through taxation. However, the owners only pay Social Security and Medicare taxes on their wages and salaries from the business. Income taken as distributions is now not subject to self-employment taxes. So this is how, when an LLC elects S Corp tax treatment, the tax savings can become beneficial to them. We've gone ahead and summarized the LLC versus the S corporation here for you on this slide. As you can see, for both the LLC and the S corporation, there are state filings that are required to bring that LLC into existence. And for an S corporation, it starts out with a C corporation, and then the C corporation would have to submit and file Form 2553 with the IRS to become an S corp. Both, as you can see, offer limited personal liability and basically protect the member or the shareholder of that LLC or corporation by providing them with liability protection. There is transferability of interest. Duration is unlimited. Yes, there is pass-through taxation, but again, with an LLC, it's only upon election, and the list goes on. And you can, these slides are available to you after this webinar, so you can familiarize yourself with this. We are now in time for our second polling question. Gail, back to you.
Okay, this is our second polling question, second out of 4, and I have a couple announcements to make right after this. So let me first read the question. The question is, the IRS can revoke an S corporation status if they determine what? And your possible answers are: the shareholders are substantially underpaid for the services they provide. Shareholders are substantially overpaid for the services they provide. Shareholders are paid late for the services they provide, or shareholders are paid a reasonable salary for the services they provide. So pick the answer you think is most likely to be correct and click submit. If you have any problems answering questions online, sometimes depending on the device you're using, the system we use won't let you post your answer online. You can always post your answer in the Ask a Question box, and we will record it there. Also, we have an announcement about the slides. The link to the slides, or the URL for the slides, is actually now available on your screen where it says total answered questions in that Ask a Question box. If you click that, you can then copy the URL and open that in another screen, so you'll have a copy of the slides there. One other way you can do it is if you refresh your screen real quickly, this link to the slides is down in the event resources box, along with a flyer that CorpNet has provided us too. So either in event resources, you'll have to refresh your screen to see the slides link there, or you can see the URL for the slides where it says total answered questions. So, okay, I think with that, we're back to you, Nelly.
Thank you so much, Gail. Ladies and gentlemen, for those of you just joining, we are talking about the S Corporation versus LLC, and my name is Nelly Akalp, founder and CEO of CorpNet, legal document filing service that can assist you as a consultant advisor in helping your clients with business filings, compliance, payroll, and state tax registrations. We are talking about the S Corporation versus the LLC, and right now we're going to be talking about choosing which type of entity is best for you or your clients. So what should be considered? Well, first and foremost, let's talk about where the business is going to be conducted. wanting to have limited personal liability for business activities. So these are questions that you want to ask your clients: where they're going to be conducting business. Do they want to have limited personal liability for their business activities? Whether, they're going to have a partner or an investor in the business. What is going to be the company's expected earnings and deductions, whether they have a desire to minimize self-employment tax obligations, what their business goals are, whether they have a tolerance for paperwork or compliance formalities. And then also, what is their tolerance level for registration and administrative costs to set up and maintain a business structure? So those are all of the questions that should be considered when you guys are advising your clientele as to what type of entity they should structure their business as. Now, I've put together a few examples here to help you differentiate, and maybe this will make it easier for you when you're advising your clients as to whether one should go S Corp or LLC. So here's an S Corporation election example for you. The scenario is, and what we're trying to show here is an S Corporation example of when the corporation has authorized versus issued stock. So here's the scenario. Jill's business is growing and she's decided she needs liability protection. Her business plan also includes offering stock to help fuel her growth. If she structures her company as an LLC, she won't be able to offer stock. However, if she chooses to be a C Corp, she could offer stock, but she must determine how much authorized stock shares the company will have at the time she incorporates. If she wants to change the number of authorized stock shares, she will need to amend the articles of incorporation. Here's the solution. As an S corporation, she can set aside a portion of the stock shares that can be offered to future investors without having to amend the articles of incorporation or have a shareholder vote to increase authorized shares. Here's another example. Seeking investors, okay? So Sam's business is relatively young, but he has a great idea that will put the company on a fast track for growth. To implement his idea, he needs substantial financing. Here's the solution. He and his accountant have decided that offering common stock is his best option, so electing S corporation status would be his best option. Another example here with an S corporation is reducing a large tax burden. Here's the scenario. Lily's business is a C corporation and is doing very well. In fact, she's reached a point where the double taxation she experiences as a C corporation is becoming a financial burden. She's eager to avoid double taxation since she must pay corporate income taxes. Plus, her payroll taxes are significant. What is the solution? Here's the solution. As an S Corp, she would no longer have to pay corporate taxes and she can distribute dividends to lower the amount of money that goes towards paying self-employment taxes. Here's some LLC examples for you. The first one being a sole owner. Here's the scenario. Mike is a sole proprietor and runs a small website selling kids' toys. Mike is really busy and has no staff, so sometimes he inadvertently mixes his business and personal funds by commingling. His lawyer wants him to incorporate so he can gain liability protection, and his accountant told him he could get in trouble if he didn't keep his finances separate. Here's the solution. Now, as a single member LLC owner, Mike gained the liability protection of an LLC, which the LLC offers, and is more vigilant about keeping his personal assets separated from the company assets. Here's another LLC example for a startup business. Here's the scenario. When choosing her business structure at startup, Lauren explored her options and chose to be an LLC. Forming an LLC gave her the liability protection of the corporation, basically afforded her liability protection that a corporation offers, and saved her money both initially and on an ongoing basis. Why? Because she didn't want to deal with the headache of paperwork and more administrative and compliance costs. So LLCs are more flexible than corporations when it comes to running the LLC for startup costs to form the LLC, and also when it comes to paperwork and maintenance. Here's another LLC example where we're talking about a long-term company and no stock. So here's the scenario. Joe's graphic design is doing really well, but he wants to hire a few core employees and stay relatively small. However, he also needs liability protection. Here's the solution. Selecting an LLC business structure makes the most sense because it's simpler and less complex than becoming a C Corp. And he never plans to issue stock. So in this case, the LLC makes more sense. Now, does an S corporation election make sense for you or your clients? Says LLC. Let's talk about that. If your client is looking to avoid formalities, paperwork of a corporation, such as drafting minutes, electing board of directors, holding annual meetings, an LLC with S corporation election would be a great fit for them. If your client is looking to stay in business long term, an LLC with S corporation election could be a wise choice. Also, an LLC owner that elects to file as an S corporation would take payroll instead of guaranteed payments, limiting self-employment tax, which could be appealing to many of your clients. Also, forming an LLC with an S corporation election is a wise choice if your client intends to file as a partnership or sole proprietorship in the future. Now, how do you form an LLC? When to form the LLC? So first of all, you need to decide when you want to form the LLC, okay? Oftentimes, it's best to form either at the beginning of the year or at the end of the year or at, right after tax time. Often, we try to recommend to file an LLC as soon as possible after starting a business, but here's the bottom line, okay? If you've decided to start a business and, you feel that you have a lot of assets, the bottom line is form the LLC as soon as possible so you can get that liability protection. By waiting, business owners expose themselves to liability. Now, oftentimes I'm asked, hey, Nellie, well, it's the end of the year. Should I form now or, form at the beginning of the year? And here's the answer to that. If it's year end, you can still form the LLC now for the following year, okay? So there are options available to you and we can help you with all of those options. But just keep in mind that an LLC start date is not retroactive. As a result, owners will probably need to file 2 sets of income tax returns for the business if it changes to an LLC mid-year. So for example, if an LLC were formed on June 1st, its owners would need to file taxes as a sole proprietor for, from January through May 31st. And then they have to file taxes as an LLC from June 1st through the end of the year. We also get asked where to form the LLC. So once you decide to start a new business, you must choose to, the state to form that LLC. If you have a small business, the general norm is to incorporate in your home state where the members reside, where your employees are, where the servers are located. So the general rule of thumb is to incorporate in the state that the LLC is going to, perform the majority of its business or where the owners of the LLC are going to be residing and conducting business. Delaware and Nevada are also popular options. However, Delaware is chosen because it has the most developed and flexible corporate statutes in the country, and it's considered pro-business and very anonymous. Nevada is also popular because of its lack of state corporate income tax, franchise tax, and personal income tax. It also has relatively low fees. But all of this aside, whether, wherever you reside or your clients reside, Delaware and Nevada are really become a non-issue because of the fact that if your clients are living in a state other than Delaware or Nevada and they form in Delaware or Nevada, then you're basically essentially subjecting your clients to two states' tax laws and corporate laws, and that client of yours is most likely going to have to still pay the taxes of the state that they're actually, residing in and where their principal place of business is located within. Now, here are the steps to form your LLC. In the interest of time, again, we've listed out the steps here. Generally, it starts by filing articles of organization with the state, designating a registered agent, putting that information on the articles of organization, filing it within the state. Once it's filed, obtaining an EIN, creating an operating agreement, opening up the bank account, and the list goes on here. But, for example, if the LLC is going to be conducting business in multiple states, creating the home state LLC and then foreign qualifying to do business in other states where that LLC is going to be conducting business, opening up that bank account if you're going to be having employees registering for and setting up the payroll tax accounts, if there's going to be taxes charged by the LLC, registering and setting up those sales tax accounts, and all of these steps and more, a company like our company can assist you with turnkey. Now, how do you elect S corporation status for a corporation or LLC? This is a big one. Again, as we've talked about, and my apologies to you here, the date has not been updated here, and it says 2023 here. But again, we will update this for you. The S corporation election deadline for the upcoming year is March 15th. And generally speaking, to elect S corporation election, it can either be done 75 business days from the date the corporation or LLC comes into existence, or it could be done for the following tax year by March 15th of the following tax year. So newly formed LLCs and corporations have 2 months and 15 days from the date of formation to file for S corporation election for the current tax year. And if you want to have that election effective for the following tax year, it's by March 15th of the following tax year. Now, eligibility for S corporation status. So to qualify for S corporation election status, a corporation or LLC must meet the following requirements. Again, you have to be a domestic corporation or a domestic LLC. You can only have allowable shareholders or LLC members. What do we mean by this? Can be individuals, certain trusts and estates, cannot be a partnership, corporation, or non-resident alien shareholder. You cannot have more than 100 shareholders. You can only have one class of stock, and you cannot be an ineligible corporation, which means what? Certain financial institutions, insurance companies, and domestic international sales corporations. If you meet all of this, then you submit Form 2553 election by a small business corporation signed by all shareholders by March 15th of that tax year's deadline. Again, my apologies here. The dates are not updated here as we do this a lot. So again, to submit Form 2553 election by a small business owner has to be signed by all shareholders, and it has to be submitted to the IRS by March 15th of the following tax year if you miss the 75 days deadline. So bottom line is, for existing corporation or an LLC who wants to now become an S corporation, you have to submit and file the Form 2553 by March 15th of the following year. And we're currently in 2024. So if you want your corporation or LLC to have S corporation election approved by the IRS, then you have to make the election on or before March 15th of 2025 for your election to be effective in the 2025 tax year. For a newly formed corporation or LLC, once it's formed, you have 75 days from the date it's formed for it to become effective. If you miss that deadline, then you miss it for this year, but you can have it effective for the following year. And again, if you're unclear about this, please post your questions in the chat and we'll be more than happy to assist you. So again, I want to reiterate steps to elect S corporation tax status. First and foremost, the entity has to be incorporated as a C Corp or have filed as an LLC. Second, a C corporation electing S corporation status has to submit and file IRS Form 2553 signed by all shareholders. An LLC electing S corporation status must submit and file IRS Form 2553 signed by all of its members. An LLC electing to be taxed as a C corporation has to submit and file IRS Form 8832 signed by all of its members. Now, what if the S corporation deadline is missed? If a corporation or LLC fails to timely file its IRS Form 2553 with the IRS, the S corporation election will not be effective for that year. A corporation will be taxed as a C corporation. A single member LLC will be taxed as a sole prop, and a multi-member LLC will be taxed as a partnership if they miss the S corporation deadline. A late S corp election is generally effective for the next tax year, as I was talking about. Now, does the IRS grant relief? Possibly. Relief for late elections may be available if the corporation or LLC can show that the failure to file on time was due to a reasonable cause. We are now in time for our third polling question. Gail, back to you.
Okay, this is question number 3, and remember you'll need to answer 3 out of 4 questions in order to qualify for CPE credit. The question is, which form is utilized to elect S corporation status? And the answer options are Form 1098, Form 2553, Form 1099, or Form 1065. So pick whichever one you think is right and click the submit button. And just as a reminder, if you're looking for the slides for this webcast, you can click the total answered questions option in the Ask a Question box on your screen. And there's a URL there that you can copy and paste into another screen to download the slides. And I think we're back to you, Nellie.
Thank you so much. So S corporation election at the state level, if you guys recall, I had mentioned at the beginning of this webinar that many states have different rules when it comes to S corporation election benefits, and the benefits can change at the state level versus federal level. Most states are given S corporation pass-through tax treatment, but there are exceptions. Critical that clients understand how this affects their business, and it's critical for you as their advisor to understand so you can advise them. As you can see, state level S corporation election requirements, for example, in the state of New Jersey, state level S corporation tax requirement requires filing Form CBT 2553. The state of New Jersey will only consider the election valid if all of a corporation's shareholders consent to the election and other state requirements. In the state of New York, it's a different requirement. As you can see, New York State does not automatically treat a company as a New York S corporation unless mandated to file as an S corporation under tax law section 660I. New York requires a corporation to file Form CT6 to apply for S corporation tax treatment at the state level. And then Arkansas is different. It was not until 2018 that Arkansas recognized S corporation tax treatment at the state level without additional paperwork. So you got to make sure your clients are aware of these changes. There's different requirements in the state of Utah. As you can see, Utah requires a copy of a company's notice of acceptance as an S corp from the IRS, and the notice must be attached to Form TC-20S the first time the company files its tax returns. where S corporation flow-through tax treatment does not exist. So there are some jurisdictions that don't recognize S corporation election. Tax agencies in the following areas do not grant pass-through taxation for corporations that have been approved for federal S corporation tax treatment. And here are the states. As you can see, DC, Louisiana, New Hampshire, New York City, Tennessee, Texas, and California. States without personal or corporate income tax, again, S corporation election is essentially a non-issue in some areas, as there are no state income taxes at the personal or corporate level. Some of these states, however, may enforce other types of fees to an S corporation or its shareholders. These states are Alaska, Florida, Nevada, South Dakota, Washington, and Wyoming. We are in time for our fourth polling question. Gail, back to you.
Okay, this is our fourth polling question. Which state recognizes S corporation tax treatment without additional paperwork as of 2018? And the possible answers are New Jersey, New York, Arkansas, or California. Just pick the one you think is correct and then click submit. And that's our final polling question. Okay, back to you.
It has been such a pleasure to present on this topic to you guys. Again, my name is Nellie Akalp, founder and CEO of CorpNet.com. A little bit about our company. Our mission here is to educate and support business professionals and entrepreneurs in business together. And how we do this is by providing the most comprehensive, cost-effective services when it comes to helping you and your clients with any aspect of the business filings, corporate compliance and monitoring, and state and payroll tax registration process in any of the 50 states. So as a company, we provide all of these filing services, whether it be you wanting to incorporate a business, form an LLC, keep a business compliant by making sure their annual report or annual meeting minutes are filed, and making sure that if you're having a client who has a corporation or LLC and needs to set up payroll, registering for those payroll or state tax accounts. We provide it all from A to Z. And we have a wonderful program if you're a financial advisor representing clients, where you can partner with us and become a CorpNet program partner by referring your clients and becoming a CorpNet referral partner, or if it's a service that you want to offer as your own service, you can partner with us and becoming a white label reseller partner. But all in all, the CorpNet partner program, and by partnering with CorpNet, you can refer your clients to CorpNet or offer services through our company for entity formations, business filings, state tax registrations, and compliance services. And you can either refer and earn a commission on each sale, or simply pass on the savings to your clients as a discount. Or if you don't want your clients to know that you're providing the services through us, you can resell our services to your clients. It's going to be your brand, your logo, your everything, while we do all of the legwork and back-end work without your clients knowing of anything. So you can refer to enhance your services, you can resell to attract more clients and increase revenues, and you can add a whole new suite of service offerings and 10x your revenues and get yourself, really started on a really profitable ground for the new year. So if you have any questions about partnering with us, you can partner with us at www.corpnet.com. If you have more questions, or if you want more info on how the program works, feel free to pick up the phone and dial 1-888-449-2638, or simply send us an email to info@corpnet.com. Again, thank you so much for allowing me to present on this topic. It's been a pleasure. Thank you, CPA Web Advisor, for allowing me to provide this to your audience. And my name is Nellie Akalp. Again, Our company is www.corpnet.com. Thank you again.
All right, we want to thank everyone for coming today and sharing your time with us. And thank you, Nellie, for an excellent presentation. We also want to thank CorpNet for making this event possible and enabling us to offer a free CPE credit to each attendee. Should you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. As a reminder, you'll receive a link to your CPE certificate later today in your email. Also, if others are watching this event with you at the same computer and they require CPE credit, you can email me their names and email addresses. Again, that's gperry at cpapracticeadvisor.com. After this event, you're going to be presented with a post-event survey evaluation form. We hope you'll just take a moment to share your feedback with us so that we can continue to improve our webinar series. Thank you again, everyone, and our audio will end now.